Hey, happy Earth Day and happy Thursday. Really excited to jump in here this week. We've had some interesting information from some of the other central banks in the world. We have initial jobless claims and then a lot coming up here next week. So want to jump right into things here. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal here weekly is just to kind of come to you and bring you the market news and updates of the week without getting too far into the weeds and really making sure it's the stuff that's valuable, the stuff that actually matters. So with that, let's kind of jump right in here today. The first thing that I really want to touch on is really what we saw as we wrapped up last week. So on Friday, we had housing starts come out much higher than expected. Housing starts came out at about 1.74 million. So it's just amazing how, how this housing market just kind of keeps going. The housing numbers throughout this, I mean, we've seen a little blip here and there, but for the most part has just been awesome time and time again. So it's been really interesting to see that. We also saw consumer sentiment pull back a little bit. I think it was last month that the consumer sentiment numbers were kind of through the roof, and it was really exciting to see that. But that's certainly turned a little bit here recently. And I think it's probably a matter of cases spiking. Right now, all of a sudden, COVID is back in the conversation. I think when everybody finally thought that, we were free, here we are again with cases, I think, higher than they were even at the height so far. So I think that has a lot to do with it. And it's kind of carried over to the markets this week. This week, as we've looked at the stock markets, we've had a little bit of a pullback. Nothing too extreme, but certainly a little bit of something here. And it'll be really interesting to see how that plays out in the coming weeks or so. Wednesday, well, this is very different from our typical conversations. We always talk about the United States Central Bank, the Federal Reserve. In this case, I'm talking about the Bank of Canada and some other central banks across the world, or the world. But they have mentioned some signaling of pulling back in some of that monetary policy that they've enacted, interest rates, buying, that kind of thing. So there's not a whole lot. There's a very, very slim few that are signaling this, but it is important to pay attention to. We always talk about the Fed. They've mentioned time and time again, they're not close, but next week, get ready because they do talk. So we'll be paying very close attention to that and sharing what we've heard. But it is interesting to hear so that some of these banks are now talking about using that monetary policy. And then moving into today, we had initial jobless claims come out. Initial jobless claims this week were down to 547,000. Very good news here again. It's very good to see this, especially as we've talked about where we were in this like 700,000 mark week after week after week. And here we are now kind of seeing a little bit of a pullback. All that said, although this is good and maybe a sign of layoffs slowing, this kind of ties into the consumer sentiment numbers we just talked about. And if there are concerns about, COVID cases spiking or something along those lines, it may play into the jobs numbers. So it'll be important to watch that as well. But those were the biggest things this week. And again, the biggest thing I wanted to touch on was the central bank piece, because as we move into next week, there's a lot coming up. We've got new home sales. We've got the Fed chair press conference on Wednesday. So they meet Tuesday. We got Powell talking Wednesday, and that will be very interesting to pay attention to. I don't expect them to signal any pulling back, but as you know, those who listen to us week after week know, if there's anything between the lines that kind of hints at that possibility, that's a big change, and the markets are really paying attention to every single word. So really keep a close eye on that. With that, we'll transition to the question of the week. And this week, in celebration of Earth Day, I figured let's talk a little bit about ESG investing. ESG stands for environmental and social governance investing. It seems to be a big topic, especially as of late. I think culturally, a lot of people have these wishes and want to invest kind of with their heart as well. And so I really wanted to make sure to talk about it. Over time, it's been something that has always been, kind of a performance issue. They've typically lagged the broader markets, and it's been a big problem. That still to some degree has been the case, but it's becoming less and less of a problem as more and more companies are kind of adopting these types of procedures. But what I wanted to talk more about rather than the performance necessarily is the different types of investing that are out there, because ESG is a big world and there are different ways to do it. One of the ones that comes up is called sustainable and responsible investing. Not that other investing is irresponsible, but this is SRI, and probably the oldest form of this around. I think a lot of people have probably seen this. Generally, what this refers to is a negative screening. So in other words, you rule out investments based on, I don't know, tobacco, for instance, right? So no tobacco companies would make the list, that kind of thing. We also have what's called impact investing. So this is really looking for more of the, the flip side of that equation. Rather than screening things out, you're looking for companies specifically that create return and also positive social and economic impacts, or sorry, environmental impacts as well. Economic, there's the finance in me, I guess. And then another one that's really typical is ethical investing. And ethical investing is really selecting or excluding as well, really based on an individual's preferences. Now, this is obviously much harder. This is something that might be easier to do on your own. But this would be a very, very specific, like I am investing in XYZ stock and ABC stock because I believe in what they're doing and believe in the causes that they're about. The challenge that, oftentimes we see with this type of investing is that if you may sacrifice a little bit for the good of the portfolio to make sure that the companies or the excluded companies make it in or out of the portfolio you're building. Now that's okay. A lot of we have a few clients and a lot of people feel that is well worth it, right, to give that up. But just know that that's one of the challenges that often we face with ESG investing, is that if there is something that's really for the right of the portfolio, but we also have to screen it based on other parameters, that might kind of conflict a little bit. And again, that's totally fine. But I figured it'd be helpful to kind of share some of the pros and cons to these different types of investing and how they work into the bigger picture as well. So hopefully that's helpful here on Earth Day. If you do have any questions for us, you can email us directly. We'd love to hear from you and get some things on your mind so we can answer them in our question of the week. Our email is info@mainsailfg.com. Again, info@mainsailfg.com. Thank you guys as always. We will see you same place, same time next Thursday at 3 p.m.